I can do it. Pyria, Pyria. Prior spring pre-spin strategy focus of Maple Leaf Foods Incorporate prior to the October 2025 spin-off of its pork compressed. Maple Leaf Foods pursue a transformative integrated protein strategy designed to shift the company from a commodity processors toward a brand consumer packaged goods leaders. These strategies rest on three pillars: investing in world-class manufacturing over 2021 to 2023. Maple Leaf Foods completes over a 1 billion capital project to build centers of excellence and modernization its meat operation. Key investments include a state-of-the-art London, Ontario poultry facility, poultry facility, 780 million to deliver value-added chicken products at scale. A Bacon Center of Excellence in Winnipeg, 192 million with new in-house microwavable bacon capability. Capacity expansion in Brampton for further processed poultry lines, $65 million. These projects drive production efficiency, asset consolidation, and sustainable technology integration, establishing the foundation for brand value-added proteins product. Integrating the right sizing plant protein is responsible to modern plant-based category growth. Maple Leaf Foods conduct a 2021 review to realign plant proteins ambitions with realistic CPG growth rate. Achieve EBITDA neutrally in plant proteins by late 2023 through right sizing and focusing on core brands. Fully integrate plant proteins into prepared food in 2024. Streamlining commercial and operation teams to accelerate growth across meat and plant categories. in both Canada and the US. Fuel for growth. Fuel for growth. Cost and supply chain optimization. Launched in January 2025, the Fuel for Growth initiative targets supply chain optimization. A sourcing review complete by end 2024, delivering enhanced saving, scalability, and agility. Deliver enhanced savings, scalability, and agility. SG&A improvements. Commercial and operation restructuring. Reduce headcount and streamline process. Sales. Selling general administrative expenses are the non-production costs of running a business, especially daily operation, but not directly tied to creating product or service. These expenses include costs like salaries for administrative staff, rent, utilities, advertising and marketing. Understanding and managing SG&A is crucial for a company's profitability and operational efficiency. Trade marketing is considered part of selling general and administrative expense. Trade marketing expenses such as costs for advertising, sales commissions, and trade shows fall under selling and general categories of the SG&A, as they are the non-production costs necessary for running and growing business. Selling expenses. These categories include sales costs directly associated with marketing and selling a product. This can include trade show expense, advertising, and sales commissions. General and administrative expenses. These include the day-to-day operation costs of the business, such as rent, utilities, and management salaries. Indirect versus direct. While trade marketing involves direct selling activities, many of its costs are considered indirect selling expenses, as they are incurred before and after a sales to generate demand, like promotional activities. Poultry. The company's focus has shifted towards becoming a focused consumer packaged goods company with leading brands in sustainable proteins categories. Key investment considerations include the company exposure to recovering consumer market, ongoing cost optimization initiative, and potential multiple expansion following the separation. However, investors should monitor competitive pressures in the packaged food sectors and potential macroeconomic headwinds affecting consumer spending. Maple Leaf Foods is an iconic Canadian proteins company with a history spending over 100 years. The company recently completed a significant strategic transformation with the spin-off of its pork operation into a separate corporate trade company, Canada Packers Incorporated, positioning Maple Leaf Foods as focused, purpose-driven, and protein-centric consumer packaged goods company. Business model and revenue sources, revenue generation and product segmentation. Maple Leaf Foods generates revenue through the production and sales of a diverse portfolio of protein products. Following the 2025 reorganization, the company operates through 3 distinct business units. Prepared food, percentage of revenue, 55%. Prepared meat, key product prepared meat, ready to cook and ready to serve meat, snack cakes, plant proteins products. Poultry, Snyder's offering delicious tasting premium meat products. We craft our food with patience and care since 1890s. We always take time we need to make delicious food you can serve with pride. In the end, quality is what matters, and quality never gets old. Maple Leaf believes high quality proteins is the foundation for healthy, growing body. We prepare natural, delicious proteins to nourish Canadian families. We are for real. Greenfield Natural Meat Co. We exist to make a better world by making meat right. Better food, better care for our animals, better communities, and a better planet. Fantino Mondello, an authentic Italian charcuteries. It offers authentic Italian charcuteries with a modern twist, crafted in Canada with premium ingredients, honoring the simplicity and freshness of Italian cuisines. We adhere to traditional Italian craftsmanship introduced to Montreal by our ancestors 70 years ago. Since then, we have never stopped creating absolutely delicious products that elevate culinary, and social experience, separating culinary, fresh poultry products, fresh pork product. This segment was spun off as Canada Packets in October. The company's revenue streams include meat product sales, including fresh and processed meat under brands like Maple Leaf, Schneider's, plant-based protein sales, food subsidiaries, Greenleaf Food, Light Life, and Phil Rose. Plant-based protein sales, food, Greenleaf Food, Light Life, and Field Rose. Food service and food ingredients, supplying restaurants, hotels, and other food service providers. International operations, exporting products to global market. Maple Leaf operates primarily in Canada, with significant presence in other international markets. Canada, primary market with majority of revenue. United States, substantial and growing market presence. International operations in Japan, China, and other international markets. The company is focusing on expanding its geographical reach in the U.S. market by building its existing protein platform and new organizational structures. Growth drivers. Company's growth is propelled by several key strategic initiatives. Hotel. Portfolio focus, capitalizing on growing consumer demand for proteins through a singular portfolio focus. Brand investment, strategically increasing marketing and advertising investment behind leading proteins brands. Sustainability leadership, leveraging company's leadership in sustainable meat. In innovative pipelines, accelerating pace of consumer-focused innovation. Over 50 new skills introduced in 2024. Geographical expansion. Expanding reach in the U.S. market by building on existing protein platforms. Customer relationship. Building on strategic relationships with customers throughout joint business planning. Cost optimization. Implementing Field for growth initiative to reduce cost and maximize potential. and underutilized plant, including plant closure for Brantford. These measures improve margin and prepare the company for standalone CPG leadership. Brantford. Top products. Based on the recent segment reporting, Maple Leaf revenues is dominated by three main categories. Food-specific product level revenues percentage are not though specific product level revenue percentage are not publicly disclosed in the search results. Prepared meat, including products under the Maple Leaf, Schneiders, and other branded dairy meat, bacon, sausage, poultry, products, fresh poultry products under Maple Leaf Prime and other brands, plant-based proteins, products under Light Life, Field Roast brands. The company's continuous innovation, introducing over 50 new SKUs in 2024, indicates a dynamic product portfolio that evolves with consumer preferences. Largest customers. The search do not specify Maple Leaf's largest customers or the percentage of revenue each customer represents. Based on the company's sales channel analysis, their primary customer segment include retail partnership, major grocery chains across North America. Mentioned examples include Loblaws, Sobeys, and Kroger. Food service distribution, restaurants, institutions, and other commercial clients. Online platforms partners with major online grocery platforms and deliver service. The company's annual report or regulatory filings would contain more specific information about customer concentration, which is not provided in the search results. Maple Leafs utilize a multi-channel sales strategy to reach consumer and commercial customers. Sales channel, retail sales. Product distributed through major grocery chains and supermarkets across North America. Food service distribution, supplying restaurants, hotels, schools, healthcare facility, and other food service providers. Partnership with online grocery platform and third-party delivery service. Instacart, Amazon. International export. Product exported to customers in Japan, China, and other international markets. While specific cost percentage by sales are not publicly disclosed, the company's major costs include supply chain optimization, enhanced saving, scalability, and supply chain agility. SG&A improvements, restructuring of commercial and operation teams result in leaner organizational structure. Manufacturing efficiency, the strategic review of manufacturing and operating network to boost capacity utilization. Capital expenditure, discipline. Capital expenditure at more typical levels in the range of 160 mil to 180 mil for 2025. Marketing strategy and results. Recent marketing strategies. Maple Leafs employs an integrated marketing approach that combines both digital and traditional tactics. Digital marketing. Comprehensive digital strategies include content marketing, SEO, paid advertising, and social media engagement. Brand positioning, focus on being the most sustainable protein company on earth with emphasis on quality, nutrition, and sustainability. Dual approach, marketing both traditional meat products and plant-based alternatives to different consumer segments. Purpose-driven marketing, increase investment in digital storytelling around sustainability and commitment. Influencer collaboration, partnering with influencers to amplify brand's message and reach new audience. Data-driven approach, use analytics to understand customer behaviors and personalize marketing message. Marketing result, the effectiveness of the company's marketing strategy is reflected in recent financial and operational performance. Financial impact, Q2 sales growth of 8.5% with prepared food sales increasing by 7.5%, driven by pricing, improved mix, and volume growth. Clear brand strategies, each designed to adjust specific consumer demand space. Innovation success, successful launch of over 50 new SKUs in 2024 with accelerated pace of consumer-focused innovation plan. Market responsiveness, launching brand campaigns in Canada that response to the Buy Canada Canadian movement, demonstrating adaptability to consumer sentiment, launching brand campaigns in Canada as response to Buy Canadian movement, demonstrating adaptability to consumer sentiment. Market and economical risks, consumer sentiment, vulnerability. Evolving macroeconomic factors continue to influence the operating environment and may impact consumer sentiment, particularly in a potentially challenging economic backdrop. In a potentially challenging economic backdrop. Tariff exposure. The companies acknowledge ongoing monitoring of the evolving tariff landscape between Canada and the US, which could impact operations and profitability. Competitive market. Intense competitions in packaged food industry from established players with significant market pressure. Commodity price volatility. Exposure to fluctuation in pork market and other commodity inputs. Though recent normalization has been favorable. Operational and strategic risks. Post-spin execution, successfully separation and independence of operation of Canada Packers requires careful execution to realize anticipated benefits. Supply chain disruptions, potential disruptions in supply chain that could impact production and distribution. Plant closure, integration. Planned closure of the Brantford plant in the first half of 2025 requires smooth operational integration, cost inflation, ongoing pressure from input cost inflation that may not be fully offset by pricing action. Growth catalyst, spin-off value creation, strategic focus enhancement. As a standalone CPG company, Maple Leaf Foods can focus exclusively on growing its prepared food operation in North America, building on brand strength and deliver in operational excellence. Multiple expansion potential. Management believes the trading multiples as an integrated company was misaligned with underlying value, creating opportunity for some of the parts valuation. Supply agreement benefit. Through an evergreen supply agreement, Maple Leaf Foods would have reliable access to high-quality pork at market price from Canada packers while maintaining an anchor customer relationship. Shareholders value distributions. Maple Leaf Foods shareholders receive shares in Canada Packers, provide direct participation in both entity growth stories. An anchor customer is a client who provides significant, stable, predictable portion of a business value. For service providers, it often means a steady stream of work or retainer, while for a startup it may be a large initial order that validates the product and provides capabilities. Managing this relationship is crucial for financial stability. An anchor client can provide reliable income, but also represents risks if the business becomes overly dependent on them. This is a key financial concept that was central to Maple Leaf Foods' decision to spin off its pork business. Let's break down its simple terms, explaining multiple expansion potential. In essence, this means that by splitting the company in two, management believed the total value of the separate part would be greater than the value of the combined company. Here's a breakdown of the key concepts. Table. Key concept behind multiple expansion. Trading multiple. A ratio like price to earning that investor use to value a company. A higher multiple means a higher valuation. Maple Leaf Foods example, as one company, investor apply a single brand multiple to its overall earnings. misaligned with underlying value. The markets were undervaluing the company because it was complex and hard to understand. The high-growth branded prepared food business like sliced meat was being dragged down by the lower margin. Volatile fresh pork business a commodity. Sum of the parts valuation, valuing each business segment separately and adding them up. Value of prepared food co plus the value of pork co equals to total potential value. Multiple expansion. The increase in the trading multiples after the split. Prepared food co now deserve a higher multiple, like the other brand CPG companies. Pork co, Canada Packers get a lower but accurate multiple, like other meat processors. The bottom line figure is like this. Before the split, the market saw Maple Leaf Foods as a confusing mix of a stable branded business, like Kraft Heinz, and a commodity business. Kraft Heinz, a commodity business like a pork processor. Investor did not know how to price it, so they apply a discount valuing the whole company at a lower price. After the spin-off, the new Maple Leaf Foods, the branded CPG company, can be compared to peers like Kraft Heinz or Hormel Foods, which trade at higher valuation. This is multiply expansion. Canada Packers, the pork processors, can be compared to other meat companies, attracting investors who specifically want that type of business. In summary, by separating, each company can be valued more accurately and highly on its own merit. Management believes that this sum of the parts would be greater than the whole, ultimately creating more value for shareholders. For a sales strategy manager, this underscores the intense focus on driving growth and profitability in the brand consumer goods division to justify the higher valuation multiple. Seven point two, operational market catalyst. Continue pork market normalization. Return to more normal level of profitability in the pork complex, which management indicates now are materializing. Returned to more normal levels. Pots, pot. Pork Compass refers to pork business division of Maple Leaf Foods that was spun off into an independent company called Canada Packers Incorporated. This division includes pork production and processing. Pork production and processing, and the separation was complete in October. Was the name for the former pork division of Maple Leaf Foods, which is now an independent publicly traded company named Canada Packers Incorporated. Dennis Ogden was the president of the Pork Complex and was appointed as the CEO of the new company, Canada Packers. The new company will continue to focus on hog production and processing, as well as providing pork to Maple Leaf Foods for its prepared meat business. Strategic goals. This separation aimed to create two distinct public companies with their own strategies and management team to drive growth and revenue. Relationship with Maple Leaf Foods. Maple Leaf Foods remains a shareholder in Canada Packers and has a supply agreement to continue purchasing pork from the new company. So operational and market catalysts. Continue pork market normalization, return to a more normal level of profitability in the pork complex, which management indicate now materializing. Materialize. Cost initiative benefit. Full benefit for field for growth. Cost competitiveness. Competitiveness initiative. Cost competitiveness initiative. Cost competitiveness initiative, including SG&A reduction and supply chain optimization. Capital project contributions. Full year benefit from three key large capital projects: London Poultry, Winnipeg Bacon Center of Excellence, Rockwool further processed poultry expansion, exiting 2024 at one weight delivering their business case. Application of a method or conclusion, especially one based on statistics to an unknown situation, by assessing that existing trend will continue or similar methods will be applicable. Extrapolate. To guess or think about what might happen using information is already known. Extrapolate from. extrapolating from the exit pool, this will amount about 50,000 new votes. Extrapolate something to something. It would be dangerous to try to extrapolate these findings to the population. Balance sheet at one weight. Extrapolating current performance to predict its future performance over a longer period, most commonly a year. It is calculated by taking recent revenue of other metrics from a shorter period, like a month or a quarter, and scaling it up to a full year. For example, a company with 100 million in quarterly revenue is said to be an annual one weight. 400 million, assuming the performance continues. Balance sheet improvement, continued continued deleveraging of the balance sheet, driven by strong free cash flow from operations, with net debt to adjust EBITDA, improving to 2.1x in Q2 2025 from 3.4 a year ago. Competitive landscape. Maple Leaf Foods operates in the highly competitive packaged foods industry with several significant competitors. Saputo Incorporated, largest market cap, 100 3.5 billion. Largest market cap, 13.91 billion. 3.51 billion. Higher revenue, 19.09 billion versus 5.1 billion, but lower profitability metrics. Premium brand holdings, similar focus on premium food products. Smaller market cap, 4.15 billion, but higher PE ratio. Price per earning ratio, 44.71 versus 19.55. Jameson Wellness, focus on wellness, smaller market cap and revenue base. High Nile Food, focus on seafood production, significantly smaller market cap. Sunopta, focus on plant-based food, smaller market cap. Competitive position analysis. Maple Leaf Foods demonstrates several competitive advantages: financial performance, higher net margin, compared to Saputo and superior return on equity. Market position: leading brands with significant market share in key categories across Canada. Sustainability leadership: carbon neutral status and sustainable protein focus provide differentiation. Analysts sentiment: consensus target price of 36.69, suggesting 42% potential upside, stronger than Saputo 3.64%. Ownership structures: strong institutional ownership 29.2% and insider ownership around 40%, indicating confidence in long-term growth. Frequent mentioned associate stock: Canada Packers Incorporated, newly independent public company created through the spin-off of Maple Leaf Food Porks operation, maintains strategic supply relationship with Maple Leaf Foods. Saputo, major Canadian dairy and food products competitors, often compare for investment decisions in the Canadian packaged food sector. Premium Brands Holding Corporation, specialty food manufacturing and distribution company, competitors in premium packaged food segment. Tyson Foods, US-based plant company, conceptual competitors in meat and poultry market. Beyond Meat, plant-based proteins company, competitors in the alternative protein space that influence categories dynamics. Greenleaf Food SPC, Maple Leaf subsidiary, focus on plant-based proteins, operates Light Life and Few Rose brands. Focus: major US grocer retailers, representative of the company's key retail consumers partnership. Maple Leafs present and compelling investment opportunity through following its strategic transformation into a focused consumer packaged goods company. The completion of the Canada Packers spin-off unlocks significant values and allows both entities to pursue focused growth strategies. The company's strong Q2 result with 8.2 revenue growth and 20.9 adjusted EBITDA growth demonstrate operational momentum. Key advantage includes its portfolio of leading brands, sustainability leadership, and ongoing cost optimization initiative. However, investors monitor competitive pressure, potential macroeconomic impact on consumer spending, and successful execution of the post-spin-off effect. Look, this report is based on information available through October 9, 2025, the recent completion of Canada Packers spin-off on October 1st, 2025 means some historical information may not fully reflect the company current situation. Okay, that's it. See you next time.